Hello everyone, how are you? Another day analyzing the indices. Here we have the S&P falling more than zero by 33%, and since the 11th, 12th of April, when it made this short-term trend reversal, it's fallen 2.37%. We're at a very interesting point here if we take a slightly longer view. What does this look? Of all the upward movement that the S&P has made since October, with an appreciation of around 29%, this correction, whose main objective is to test the average of 21, is close to happening with approximately 1% more to go. If we look at stocks like the Nasdaq, for example, this correction would have already achieved its first objective, which is to test the of 21. Basically on the daily chart where we can pick up our shorter term opportunities. We're currently in the third day of trading, where in this we call it a cry from the bear market. We bought a put here, and at the moment these puts are already worth 12 Rs, $12.8, sorry. And with that we have an appreciation from the point of entry until now of 27% on the amount invested in those 3 days. Okay? The same correction happened with the Herschel, and the same correction happened with the Dow Jones. What we can highlight today is the continued strong rise in the dollar. In the dollar. And the dollar, which always precedes a more significant fall in the market, is working here in full force. It's already well known that some major central banks, such as the Chinese and the US, have been making a lot of positions in gold and are driving up the price of the commodity day after day. As I said, this is usually the case, or statistically in the last big falls, we've seen a very significant rise in the value of gold before and during the big movements. We have this situation happening, and so far we can only see gold working very strongly in this way. Another point that's important for us to talk about is oil, which corrected 2.93% yesterday, and today it's pinched $86 again. See this green line I've put in the middle? This is what I call the OPEC zone. Why is that? Because every time the market was too far away from $85, we had interventions there by the oil producers to force a price to $85, and it's coming back here to this region again. But yes, it's on an upward trend, which has the possibility in the near future of going towards $95. Very good. Speaking of the main highlights, Netflix just came out with earnings, which surprised the market. No less than 269.6 million subscribers, up 16% on the last balance sheet. And on the maps, pulling up our maps here, we have very mixed sectors. Technology still weighs heavily on the indices. We see Amazon down 1, Tesla down 3.55, Microsoft. Here we see the communications sector holding up a little better. Utilities are down for the second day in a row, and banks are also down for the second day in a row. There are a few more stocks that are holding back the market's fall. Wells Fargo stands out, up 2.73% today, right? And our operations, which we've been working on day after day. What have we got? I'm talking about swing trading, okay? After all, what we work on day after day are shorter trades. trades averaging between 6 and 8 days. And here we have a sale that was made at the First West Bank restaurant. Sorry, with a sale, an operation on the selling side at 23.40. And at the moment we're working here with approximately 5.5% profit. There's enough room to put a profit in your pocket. And the operation on the Nasdaq's fall, which we bought the Mapuche here at 9.47, is currently hitting 12.08, 27% gain in these 3 days as well. This is an operation in which we no longer have any reason to lose money. So here we are working with a trailing stop that calls for us to guarantee 20 or 25% of this profit if the market comes back. All right? God bless you all. Hugs to you all. See you next time.